Right. Today is the 7th of May. It's almost 3 p.m. Singapore time, so I think it's a good time to look at the charts. Movement should be coming soon. Today is Thursday. I'm going to be looking at a couple of pairs. 8 pairs: the Euro Yen, Swiss Yen, Euro Aus, Aussie Swiss, Euro Dollar, Dollar Swiss, Pound Yen. Maybe Pound Dollar. Okay, so let's look at the Euro Yen first. Right. So I think if well, I did some initial work here, as you can see. Some initial work has been done. It's currently in a downtrend, but the dangerous thing about when price moves this way is that these moves, they are all, you see, these moves are all kind of connected with each other. So my greatest fear, if you're looking to sell, you see, they're all connected all the way to the top. So if I remove, so just doing some random work, yeah, here, yeah. If Euro Yen decides to go up, it could, any point in time, if it decides to pierce, see all these boxes that I drew over here, right? If any point it decides to pierce up, it could go from this level all the way up to around this level. That is one worry about the sales. If you're selling, I have to keep this into the back of my mind as a swing, like a 1, 2, 3, very, very possible. Now it depends on where that 1, 2, 3 will start, because also is it going to start here? You wouldn't know. Is it going to come down? Is it going to go up, come down here, and then this move starts to go up here? And then, of course, there's no confirmation that it will go up. It could always pull back before it actually goes as well. But we'll have to see. This just too far to actually predict. Because right now, at this point in time, it's still beneath the trend line. So all that is just pure speculation. But the main thing I want to say is this part here about price getting back to 132. That possibility is always there. If it wants to, if it's one day decides to cut its way up, you can plunge through. You can just melt all this like butter, pop, 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 and then you just shoot all the way up to this top over there. Now, but before it does that, of course, market needs to stop some people out, right? If market wants to go up, you need to have people be stopped out so that they can fill their buy orders. Some people need to sell at the low, and well, this is the low over here, right? If you can come down here, and some people buy and then push it down some more to clear all the stops. So people who bought forced to sell, then market makers will come in and fill their sell orders, maybe like kings over here, stuff like that. So that they can push it that low. I guarantee you, a lot of people who took the buy, because some people might think impulse, right? Yeah, but that is not so easy as that. The getting in at the bottom has a lot of risk involved, right? Because even if it bounces up like that, but that's just a bounce, that doesn't mean that as well. It might not. It might even bounce up and then just crawl its way back down. Just crawl its way back down. So just very premature right now. But again, this move will always be there, right? In fact, if this one actually came down real slow and then broke this low, broke even this low and then crawled to here, man, this is a very good buy. This is a very good buy if that happens. All right, that is a very good buy. So, well, we are not there yet. So, naturally, I would hope that the price being there would be perfect. You can even put some orders there, some buy orders there, But right now, we are over here. So, we're going to look. This moment in time, you have this move down. Right? What this can do at this moment in time is if this one come back up to retest any of these levels, yeah, any of these levels like so, this would actually make a possible move back down again to this level. Yeah, also. So actually what you want to see is a slow crawl up, actually. a slow crop. If you have some way to trade this to the upside, that means good for you. You have some algo to trade this move to the upside. But you understand that also there's risk involved. Right? Trying to trade this to this levels, it is tricky because what if this just fell straight down? So it's better to let this, as a swing trader, to let this move crawl its way up, and from here see if you can actually make one more move down, and preferably everything stays underneath the trend line, right? So I'll say this is the first level where it goes up, starts to crawl back down. You can always throw some EMAs. Yeah, see, EMA is all kind of down. So let it crawl back up to one of these EMAs, and then you see when it crawls back to EMA, you see it crawls back up. You might even exit a little bit, right? So you may exit, maybe break out of this EMA, start this, and then if you have a valid reason to sell, might be a good idea. Of course, if it breaks out and then starts to consolidate up there, then maybe it's gonna go up. So, but right now it's a downtrend, so we try not to think about the upside until we really see an upside, right? So you try not to think about the upside until you really see upside, impulse correction, and then the next move up. So unless it really comes out, then does this, then fine, you can think about upside. But if you're in a downtrend, you should continue to stay in the downtrend until something drastically changes. So right now, still downside, right? Until it comes upside to around here, and then downside. Because even if this was a downside, even though price action went from here to here, but look, it actually moved up before it came down. So just because it's here doesn't mean you sell here to there, right? Because this can also go up before it came down from his level to this level. So this can go up before it comes down from this level to this level. Does not mean that this is going to get there. See, it doesn't get there just like that. So there could be some pullback. So watch this and then stay the trend. That's all I can say. You're trading the upside, then understand that it's possibly there's a correction before it falls again. Let's look at the Swiss yen. Okay, just close that first, the distracting stuff. Let's see what Swiss yen is doing. It's clear. Let me just go daily first. Everything is still kind of down. Retrace are always in order, especially when you see when it kind of like breaks the previous lows. That means this level here has got an achievement. You see, it actually broke the previous low. So your price action could somehow meander its way upwards, because when it shoots down straight like this, it's very, very dangerous always to just trade after it's broken that low. So after there's a high over here, it breaks the high. Well, in this case, it did continue to go, but at some point, you see that actually happens. There's this move that is always going to be possible. That break of this top and then some kind of pullback. So when it breaks, the question is, when is this going to pull back? So this broke, and then you had this bad pullback. So if you entered here, you thought you could get up there. From here. You thought you could get up to here, but guess what? You suffered this first. This would have, maybe even be stopped out. So there's always this. Whenever you see a strong move that breaks something, it's always better to wait for some kind of pullback to some kind of level like this or like this. And then from here, you start to look for some kind of weakness back to the downside, right? So you have to remember this after a strong break, some kind of pullback is going to be in order. So after a strong break, if not here, even lower, some kind of back move is going to happen. All right, all potential credit structures. Okay, so take note of that. If you want to continue trading downside, then it's all you know how to manage that kind of trade. So there's intraday trading skills. Right. But in terms of swings, always better to just swing down before a corrective swing up, and then swing down after it has gone back to some kind of zone. Right. Yeah, so again, cells will need a corrective structure back to the top. So look at the Euro O's. Okay, I'll just draw out some zones like so about oh, this shares just something about zones. The thing about zone trading, it's a lot more about talking about more like bounces actually, right? So like so when I drew this one over here, you can see price action just went and then it just broke right through. And then this zone over here, because when it broke up, well, there's some achievement. This is like the origin. It came back down, and then of course here bounced, and then well, a lot of good stuff. But what I'm trying to say is that zone is kind of a support resistance type of trading. Its benefit is that you suffer very little drawdown. Either you win or you lose, and it happens in a very short amount of time. So there's no suffering. There's no suffering. The downside, right, uh, would be the stop loss, I would say, because often when people trade such bounces, they believe that it's going to bounce, and if it don't bounce, then sometimes they start to here didn't work, then they try to average it down, and then before they know it, price has gone from here and then all the way to the downside, and then the account is all totally messed up. So that psychologically, that's one problem when trying to take bounces is you tend to average in. But when you do a breakout, then it's really quite clear. If you do some kind of breakout, then you know that okay, so if price action goes right and it comes back here, I will be stopped out. You already know where the structure there to support the to suggest a stop loss, right? But for those who actually trade this kind of zones, actually, if you take this kind of move, like a bounce, then let's say then you must already have in your mind roughly where you want it to go. So let's say I see this as a potential place of difficulty. So okay, if this is what I suspect where price will go to, then this has to be my stop loss. And then you can reduce it by some so that your risk reward ratio is better, right? Yeah. So that is one way of doing trade management for bounce type of trades. You should never don't confuse it with swing trading. Swing trading always has some kind of credit structure, impulse correction, and the next move up. Bounce trading is not like that. Bounce trading involves, so here, if you decide that this was going to go, impulse correction means your stop loss. You believe that this must hold 1, 2, 3 because you're trading. You're hoping that it's a 1, 2, 3. But in bounce trading, you don't know what this is. The minute it came here, you didn't know. You have no corrective structure to suggest the next move. All you have is just this, and you hope that this is able to hold. And if it goes slower, you hope that you're able to sustain the drawdown before it turns. Right? Bounces. That's just the nature of bounces, right? Right? So your stocks, the way the trade is managed, the way the stop losses are put are very different. Okay. In swing trading, whenever you want to take a trade, you believe that this is going to break the top. After it breaks the top, anything can happen. All right. Anything can happen. So let's just show if this one had come like this, and then you had some kind of sideways like that. If you think it's a 1, 2, 3, when it reaches here, at this point in time, you need to exit. It's basically impulse correction, impulse. Break the top. Once it breaks the top, it's anybody's guess. So in this case, it went up some more before it came back down, right? Which is why you need to take off trades. Don't keep it like imagine it's going to go from here all the way up to up there. But before it went up there, it got stopped out first actually. In fact, if the trade actually came down here and you actually took the buy again, the second buy is usually the one that goes because this is move coming back down to few orders before it actually shoots up. All right. So let's say now you know that this kind of move can happen, right? Then it can come back here, retest this structure, and then shoot up very high. So what if this was to come here, goes up there, come and retest structure, and then it goes up again? Well, then you can expect to go a little bit higher. It's the kind of patterns that it's used to fill orders before they go, right? So we come in here, if you are confident, some kind of confirmation, you think that it's going to go, then you could do that. But of course, you must also understand this. What if this happens? So do you think that this is actually, if it crawls up, then maybe this is actually going to come out to the downside actually. So it really depends. Sometimes structures can be quite ambiguous. The timing, the speed, the movement, all very important. The faster it goes, the better it is. It's probably an impulse. Impulse move in one direction, and the amount of time that it takes to move there, very, very short. So now this is pretty strong. The question is, looking at this one over here, there's also some kind of scenarios where one sharp move is all the correction you have before price action crawls and breaks the low. So in those kind of moves, this is what you actually can kind of expect as well. But right now, Euro Aus daily, it's hard to say what this is. This is kind of in between. What would be best? I've always felt that if this one could come down to this low, I drew this blue box over here. If it could come to the low, I always feel that these are actually good buys because that means, yeah, because this up move could happen here or it could happen lower. It's better for price action to come lower. That means the up move is more confirmed. Let's put it that way. It didn't happen here, so it's probably going. The chance of happening here starts to increase, right? So what I would like is actually for price action to actually come all the way to the bottom over here. All these are just potentially a play of a corrective structure. It's not potentially a play, not structure, because it's still the downtrend. You see the box is still on the downtrend, and when this low is broken, then you're gonna get something, another box over here like so, and then you're gonna get something like this. You see, and then price action could likely even from here crawl back down all the way to this low again. Very possible as well. So the best move is for price to do whatever it wants to do. The boxes, these candles can go down, go up, go down, go down. But if it could come here, that would be a good move for a buy, right? Crawl its way down. Next one, all these three. All these was okay. So we have that. We have also, we also have this one over here. So I'm gonna move that to blue. Yeah, okay, so best place for bounce will be right there. Will be right there. And I would say, yeah. So you can expect something like this. You see? That's right. Best case scenario is it crawls all the way up to this top, right? That's for daily type of bounce trade. Now, if we're gonna go on the lower time frame, let's see what's happening on the lower time frame. 8. So 4, you have this and that. Now, this, always be very careful. This looks most like that, right? When they move long and then they have a sideways like this and they shoot up again, I find them very, very. I don't trust such moves. Put it that way. So right now, anybody will take this buy. It's a bad idea because one reason is because you have that, and time it's a time-packed swing in comparison to this. This took pretty long. You see, this took pretty long. You see, like for example, stuff like that. See, it's sharp, strong move down. You just do this. So remember, I said you tend to get another strong move down. So we get strong move down, and this one time-wise took pretty long. So if you thought that this was going to this was the move that's going to get up to there, to this level, well then you took some kind of breakout. Well then you live through this drawdown. Right. So now I'm saying that this one looks kind of takes a long time. So am I wrong to expect something like this? Can there be at some points? Can there be something like this strong move down? It's going to happen soon. And this strong move, or this small sideways and this small up, very, very suspicious. I mean, I wouldn't want to buy this break. This is under the shadow of that, so I find that a little bit intimidating to sell it down. Now, if this one was to somehow crawl its way up, crawl like that, yeah, sure, this looks like a good sell because they're like brothers and sisters, right? You know, they start to have some, give it a look like this, right? Because it didn't happen here, so it should happen there, and then you know what your stop loss should be. What's your stop loss be? If you think that's going to happen, that's right. That's your stop loss right there. That is your risk reward. Okay. These are time factor swings. A comfortable, logical way of rule-based trading system, right? Time factor swings. So, but always remember this one can suddenly just fall right here, suddenly give you some head and shoulder pattern like that, you know, then bam, get caught. So you don't take this unnecessary loss. That's what I'm saying. This is not safe at all. Okay, so the down move, this down move is better to take this down move, whether it's from here or whether it's from up there. Either one of these moves are either one of these are good, but there's a certain look to it that it should adhere to. All right, certain break of certain trends, breaking the previous top. Like if you didn't, the idea is that if you did not do this, then it should do that. All right. Yeah. Okay. So next, Aussie Swiss. Hold on, something has changed. Okay, I mean profits good. Okay, so Aussie Swiss. Something changed on my MT4, so. So right now I'm looking at, let's go look at something else. Let's go look at the pound yen. I was supposed to look at a certain pairs, but let me see. Okay, let's go look at pound yen. All right, now pound yen, nice. So pound yen, as you can see, this box over here. I was wondering whether it would bounce when I actually drew this. So the way I draw this is actually not that difficult. It's just basically you just see this wicks over here. See this wicks over here? Yeah. These are the places where price action will potentially bounce. So like this one, let me see. Yeah, you see a lot of little wicks over here, pop, pop, pop. Yeah, that's it. So you know what? At this zone, if you reaches here, and because it looks like a downtrend and you try to sell, means something bad is happening right now to the account, right? So if you look at the top over here, right? See, this is what I mean. This kind of moves where they go like this, they go up, do this retest, first, second, third wave down, the retest, and then when they decide to go again, and then over here, you see, and now you get a bounce. Now this is just a bounce. This bounce, people who trade this way, like they trade this kind of supply zones, they have no idea where this is going to go. All they know is not that it's not a bad thing, but it just means that the trading style is. Just 1 second. There's some noise in the background. Oh dear, sorry about that. So as I was saying, people who trade bounces, it by itself is not a bad strategy. It's not a bad strategy. But I'm saying is that it's like trying to understand an elephant has got a trunk, a tail, a leg. So if you touch a trunk, you say, "Oh, I know how I can handle the trunk." But the trunk does not define the whole elephant. So swing trading is we do swing trading trying to understand what the complete picture is, and not that the elephant is just a trunk. The elephant is, you touch the elephant's trunk, it's not just a snake. I mean, the elephant is not just a snake. You touch the elephant's feet, it's not just a, or it's not just a, you know, it's not just a, like a log, right? An elephant is more complex than just a tree stump. So what I'm trying to say is that when you try to master swing trading, it's a lot of trying to understand how to get price is over here and you want it to get over here. But how is it going to get there? When people draw stuff like that, you already know that I will emphasize that it is not so easy that price just goes like that. It does happen, but that's not a realistic way of trading, especially if you're trading the bigger time frames, right? In time factor swings, we're talking about higher time frame trading, all right? So the thing is that even though price action, you're looking for price action, maybe you're thinking this impulse, this is correction, this is impulse, maybe to get to there. But as it gets there, this guy is like a pilgrim trying to go towards the promised land. And then as he gets there, there's a lot of stuff in between that's going to try to stop you from getting there. This is also another place, right? It comes down, you're going to get a reaction. Does this mean that this sharp move up is going to impulse correction? So like I said before, just because you see a sharp move doesn't always mean that. It depends on the context of the entire picture. Sometimes it is, sometimes it's not. Sometimes you get some straight, and then this one, and then suddenly you're not so sure anymore. And then it breaks this previous low, it makes a small one, correction here, and it breaks that, and then it goes. Came back to retest this before it crawls down again. You see, so a sharp move doesn't mean that it's also initiating a move to the upside. Maybe it is, maybe it's not, right? What will make this a reliable move? Well, it goes up, come here, it goes up to here, it comes here, it goes up to there. Maybe it breaks this out a little bit, then suddenly it crawls down really, really slow to here, then suddenly it looks like, you know, the more sideways it is, the likelihood you have a confirmation for more upside. So, but right now, all you see is this, and it came out to this zone. And if you took the bounce from here to there, you're a smart trader. That's a good trade. That is I took a bounce trade. I believe that you will bounce here. My stop loss is just there. So if I lose, I will lose it right there. That's one way of trading. Your price action just crashes its way down here. Okay, I'll go and take a bounce. I don't know, 20 pips. If I lose, I'll just lose this amount. If it comes all the way here, right here, okay, if I bounce, I want it to bounce. Otherwise, do I know this is going to happen? Impulse, correction, impulse. Even if I know, I don't care because I'm a bounce trader. It comes here, this zone has never been touched. Well, then when it comes here, you just bounce there. That's it. Maybe you just fit to your trade too. Try to get there. That's also one way of trading. Sorry. And it's so messy now. So right now, what I'm trying to say is, right now it's at this zone here where you see this wicks here. Yeah, this wicks here. So you just have this, just put it on. It's very simple trading style, very simple. All right. So you have very nice swing trade, like over so. So right now this, you see this is going to be a possible problem area. It comes to here, you have to exit the trade because this is a bounce trade. There's no guarantee where the hell this is going to go. Is it going to go there? You don't know. If you're going to take a lot of trades, you just have to take and go, come here, take and go. It goes up here. Are you going to sell this? Because it's a bounce trader, you might say, hey, am I going to sell this? For a bounce I sell, I'll just take from here to here and then I'll just exit. What if it goes from here to here? Or what if here it goes here, it comes out, it pierces through, comes up to this level, right? Then you think here, well, do I want to sell it back down? Now, a swing trader will know that he has to wait for something before he goes, A swing trader will know that, but a bounce trader doesn't understand the context of swing trading or how to count waves or how to label. He likely would not know this or be comfortable to trade it anyway. Right? So they'll just take the bounces. So it's very important when you trade bounces, just Just be happy with what you got and not try to aim for the moon because you don't know how far it's going to go. For price action to get from here to here, you need stuff here, right? But bounce traders don't like corrections, they don't like drawdown. So it's just a different form of trade, right? But bounce trading, I do like it, especially on the higher time frame. Okay, so next. Pound yen. Okay, I'm not finished with pound yen. Sorry about that. So now we're over here. Price action. Hit that. It's not even 1, 2, 3. Well, you are in a. This is a sideways structure. It could be because this correction was so deep. It might be a three-wave like ABC. But it's hard to say until this one comes up to here, then it starts to do a sideways. Or even up to here, and then it goes up, some consolidation, you know, and then this will give you a directness to try to buy up to there. But from here, it could break out, or it may just do that to come down some more. This is the crossroad here. So at this point, you gotta be careful. So the thing to watch out for is actually, this is only just one move. It doesn't mean anything. So in order to trade this move, you could have decided to trade the bounce, right? But it's not a swing trade. Basically, a swing trade requires so much stuff, right? Now let's look at dollar Swiss. Okay, I miss a couple of pair or so, but and it is what it is. Dollar Swiss. Just map out the interesting places. So this was something interesting right there. It did wick above. So in terms of structure, pretty hard to say what the structure is right now. Sometimes structures are just difficult to see. They're like 50-50, you know. Like this one went above. And this made a slow correction, and then this did that. So this and this, it looks complete. It looks like a complete structure, you see. And when it looks like a complete structure, I start to think that, maybe price action could make its way up to that level. Is that possible? Possible. It's there before. Does price want to get returned to test 0.98? But the question is, how is this guy going to get there? Now, you see, when this price tries to make its way up there, you see, when he tries to make its way up there, can you see? So it has weird stuff like this. See that stuff that? I'm going to show it. See, you got weird stuff like that. See, you got weird stuff like that, weird stuff like that. So at any point, if you try to enter, if you thought that price action was going to the upside, right? At any point you thought it was going to the upside, immediately we enter a trade, you're going to be in a loss immediately. Immediately you enter a trade, you're in a loss immediately. And it happens very often. Enter a trade, you're in a loss immediately. At the point in time when it looks like it's going up and you enter, immediately you will be in a loss. At any point in time when it looks like it's going to go up, immediately when you enter, you're going to be in a loss. See, it went down. It went down. So what I'm trying to say is, if we feel that this is going to go up, if I think this is what's going to play out, so if I enter immediately, guess what? I'm going to be a loss immediately. So since the bias is to the upside, we should trade towards the upside, right? And not be too smart to try to trade these corrections. They are not so easy to trade. If you miss it, it's over. That means the price, you're caught on the wrong side, basically. Okay, so it's better to let it go down, and then from here try to find some reason to buy to the upside. See whether you can test it at that level. Because of this, you think that this is this, and then you're looking for this move to break out towards the upside. See? And does that mean that this is a complete wave pattern for the down? Hard to say. This could be all the correction as well. So it's really, really hard to say. That is one pattern that could play out. What would be worrying, of course, okay, remember, when this one comes down here, you just buy here, it's not such a good idea as well. Because what if this one comes here and plunges some more? All right, and suddenly goes up this way and plunges down, that would mean this was actually what it was, and this was a 1, this was a 2, this was a 3, this was a 1, this was a 2, this was a 3. So instead of that upside, this here is going to decide which way it's going to go. It's you need to know how to take the breakouts. Then it means I can see both ways. It could go both ways in terms of structure, but and then here is where it's misty. It's misty. There's a lot of fog. You know, imagine you and I are buddies, and then we're trying to go from one town to another town, and you know we are both soldiers, right? We're carrying guns, and we can't. The mist is so thick, we can't see as far as we only see as far as our nose. We know that we know where we want to go, but we don't. But it's misty over here, so we've got to wait for more signs, and then somehow when the signs start to develop, more swings have to develop, more structures have to develop, more people we meet along the way tell us, hey, you know, go towards the left, go towards the north. Here's a compass, right? Then we can say, oh, you know what? I think this is going to go to the downside. Oh, you know what? I think that this is going to go up. Break. It went up. Sorry. So it goes up like this. It came down. It went up. It broke this. Came back. Okay, now I think it's going towards the upside. You know. So it depends on what happens here that will suggest the direction in which to go. So in terms of a swing trade right now, like here, doesn't mean anything. If in terms of swing trading, if we're going to say, I think that that there was a structure over here. All right. Yeah. Okay. So if it comes here, I want to bounce. If that is a trade idea, that is fine. Because this move down can be a breakout that goes up, or it breaks down, it comes down, it goes like this, and then it comes down. But this move, people who trade bounces, they don't care where the price will end up ultimately. They just care about that reaction. And they have no understanding of how swings, how to actually trade swings and hold trades for, you know, one week, 2 weeks. And the psychology can't tolerate it as well. So they stick to what makes them feel comfortable, right? So if this is what you're trading, then so be it. But if you want to trade, if you want to develop your skills as complete as a trader, right, then it's good to know everything, right? So what I'm trying to say is right now, at this point in time, things need to play out. 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 Break, pop, suggest upside, right? To suggest upside, you need stuff. You just buy upside, you're gonna be drawn out immediately. And by the time this happens, it's gonna be too scary to stay in the trade. So yeah. All right, next. I think that's all I have to cover. Have I said all I wanted to say? Last one. I think I'll just do the last one. Euro dollar. Let me just go to the daily. The most dangerous thing about the dollar is about the euro dollar is this, that this move down, that this move is all first wave, this is all the correction, and this is actually making a move to the downside. That's the most scary thing. That's the most scary thing. So if this one was to come to the low somewhere over here, let's say, yeah. Well, maybe not the most scary. Breaking this low would be something really scary. So I can imagine a lot of people losing a lot of money. This would look like a nice place to actually take a bounce, but this is coming on pretty fast. So what I'm saying is, thinking this could be one move. Sorry about that. Let me just remove this. This could be one move. This could be the credit structure, and this could be the move that comes and breaks this low to this level. This would be a good place to take a bounce. This move is pretty strong. Well, but you look at the past, it's gone all the way down to 1.05 before. 1.08 to 1.05, not so far. Not so far at all. Let me just mark some of these. That's a danger of bounce. Let me see. Okay, so again, I always prefer structure to come here, break this low, come here. This would be a perfect buy. If it just crawls way down, that'd be a perfect buy. But this is just so long. This is a couple of weeks away. The other thing is that it depends on how price wants to get there. We have to go low structure. If this one does something up to here, it will be good for a sell down to this level, and then maybe it breaks down to this level, because these structure always very possible. Something slow, slow to the downside, always possible as well. And this is a slow move followed by 1, 2, 3, then there's 1, 2, 3 over there. Very possible. This. Then when it comes to here, either it stops here or it crawls down further. And this is all the correction, the sharp move up. And then when you get the sharp move up, come here, break this low first. This is a good move to buy. But before all that actually happens, now you're over here. So we're looking at, if I want to trade, if I don't want to trade, I just want to keep my money and wait till all that plays out, that's fine. But let's say right now over here, from a swing trading perspective, you do want this to go up, because right now it's kind of at this low already. You see, at these places where it's at the low, it's tricky, because they can, when price comes here and you think it's going to go lower, it could come here, it just goes lower, or it just comes here and then it bounces. You see, it bounces. So from this level, the upside makes more sense. The upside just makes more sense, because you're expecting not to just come and crawl and just do that. You're not really expecting that. You're expecting, see, even if price action comes and breaks this, even if it comes here, a second. See this low over here? See this low over here? There was a bounce, you see. So even when it comes to this low over here, now, what do you expect? Before it actually bounced up and then it came back down. So price action actually went up. It bounced and then it came back down. So now you're over here. The kind of the easy trade would be, if it came here and bounces, I'll just take it. I don't care whether it's going to crawl back up and then making it see, I wouldn't matter to me if it came down here and then crawl up and then it go up there. And then I don't care about that. If let's say it just came down here and then I just take this bounce, so be it. If I lose it right there. You got it? So likewise, if it's like bounce trading at this extreme lows, if it just, whatever it does, somehow price spin around, it came here, they just took this bounce up to there, the stop is just there. That's also one way of trading. You see here, like over here. So over here, if you decide that this is too small for you, if it is too small for you, if this box is just too small, then you cannot put your stop loss just here, right? You sort of tends to, you decide that you want it to be a bit wider, then of course you can also try this way. That's also one way. So bounce trading, you just have to measure how much you actually intend to lose and then decide how much extra you want to take, right? You don't forget, it can always crack just a bit above before it flips. So since you know that, see, it cracked above. So see here, it's actually cracked a little bit below before it goes up, and even the second try, it went down to the lows, and then after that it shot up. So if you decide that, hey, you know what, I think this is gonna bounce, but then see, it cracks above, pass. So this will come here, crack the low and a little bit more before it actually goes, right? So don't put your stop loss just there. You say, I'm at low, I will give it more leeway. Instead of putting 100 lots, maybe you're some rich guy, don't put 100 lots, just put much less first. I'm going to say you can put 10. Instead of putting 10 lots, you just put half of it to count for when it breaks past, right? So that you don't feel so bad, right? And then when it finally flips, you'll be happy, you'll be comfortable, right? So you could say, hey, you know what, if it goes past, yeah, it's my entry. So you say, all right, I'm not going to put a stop loss right here. You will just a little bit more, but then I want my profit target to be a little bit higher, like so. Let me just use a tool. So if it says here, all right. So, okay, so 1:2. Maybe you can do something like that. The stop loss is not just below here. It's you want it a little bit more, do a little bit more, like so. Right. Like so. To account for when price action happens to go a little bit further. Right. So if price action comes somehow to here, goes here, then you're a little bit anxious, and then finally it flips up. So that's one way. If bounce training is what you like to do. Right. And that's a move that kind of makes sense too, because 1, 2, 3, and then 1, 2, 3. He decides to just make the move right now. He doesn't want to make the move right now. You can remember, you can always do a sideways. The options are there are many options the market can do in order to screw people. You can always go up. And this is the one that comes back now. The bounce a little bit further before it turns up. All possible. All right. So the bounce is the most immediate move right now. It's the easiest trade I can see here. Then, yeah. All right, so I guess I'll stop right here. And I hope it was informative and helpful. This is Sherman signing out. Bye-bye. Okay, stop right